Good morning, good evening, good afternoon, depending on where you are in this world. This is Lee with a brief update for STEAM. It looks very three-wave-ish so far. So I'd like to take you through the primary and the alternate count. This is the cycle that I'm projecting. So far, the cycles have been ending at 89 days, 75 days, 97 days, and I'm thinking maybe this will go to maybe 103 days. Let's say somewhere between 75 to 103 days, somewhere in this range. To be able to identify exactly when that cycle ends would mean that the cycles are like cookie cutters, and that's not how it works. There's a lot of contractions and expansions. The reason for that is sentiment, which drives price action, is very capricious. This ABC looks very three-wave-ish unless we start doing, well, and if it is an ABC, and I think it is, it's a 5, 3, 5. And if it's complete or almost complete, and the middle of the cycle is still out into February 5, we're going to get probably price action that's going to be like something like this. And if that's the case, it'll spend most of the time of the cycle in a downtrend and less time of the cycle in the uptrend. Whenever you see an ABC, which is a three-wave price swing, it is corrective. It is counter trend to the primary trend. So the primary call is calling for an ABC, and by the spikiness, the wick effect of the price action, it looks to be about near completion. Now, let's take a look at some of the patterns. So again, we have this ABC. Note how we have 1, 2, 3, 4, and 5. Note also how we have 1, 2, 3, 4, and 5 for red A as well. But for the B, we clearly have a three-wave ABC swing of A, B, C. So when you get this type of subwave composition, you're getting a 5 for A, 3 for B, and 5 for C. And when you get a 5, 3, 5 subwave composition, this is called a zigzag ABC correction type. And I think that's exactly what we're looking at. But more importantly, on the pattern side, we saw a wedge develop here and break down. Usually wedges break down much ahead of the apex, which is a point where it joins the two trend lines cross. And not only that, but it declines below, usually I'd say 75% of the time, the origination point of that wedge. I'll give you an example of active wedges on the S&P 500. Look at this. Wedge, 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 wedge. We've got a big wedge coming up. It broke to the downside, usually comes back to kiss the underside of the lower white trend, unless we move this like so. But for now, we'll keep it like this. But you can see the effects of the wedges. Thereby, this upward pointing wedge on the STEAM price action gives a serious and significant cautionary note. Now let's look at another pattern. And this is pure conjecture at this time. But look how roundish this looks. If we draw the perimeter line to this, it'll look something like this maybe. Let's try that again. I'm doing this freehand, so it'll look something like this. And this usually signifies the pattern which is called the rounded cup, or just the rounded bottom, or the cup of a potential cup and handle. Thereby, if we get a handle pattern where price will then decline 50% to 0.618%, and then rise again. And like I said, while the expectation is for the price to go below the origination point of this upward pointing wedge, 25% of the time it doesn't. And thereby we have to keep a close eye on this cup and handle pattern potential. You see how it will interact and behave in price action perspective with regards to this wedge and this ABC. Primary count says ABC is a corrective. We're going to see lower lows. Alternate says that this pattern shows a very nice rounded cup formation, and thereby if the handle price action takes place, we may go down to maybe 33 cents, 27, 26 cents or so as a correction, and price could rise again. I hope you found this to be helpful. Have a great day.